Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 6th of June. Today is Thursday, and we are coming to the end of the week. Tomorrow, Friday, everyone will be watching basically non-farm payrolls, unemployment rate, average hour earnings, and average weekly hours. Until then, the market spiked yesterday on hopes of interest rate cuts and big data coming from the economic front saying that the labor market is just slowing down and cooling down. Today we got another bit of jobless claims and continuing jobless claims, and it came higher than expected, but it's not super important because everyone is watching, remember, NFP tomorrow. So today is just a transition day. Basically, it's just after a big move to the upside, in which yesterday we reclaimed the previous all-time highs. This orange dashed line was the previous all-time highs, and this orange line, big orange line at 19,090 was yesterday's all-time high. Today we put a new all-time high in overnight. And remember that I told you that market Wall Street doesn't like this. They don't like that. So at some point we are going to at least take this kind of trend that today we established. Today is a very narrow day, and I have my setup. I already told you yesterday that after this, it's usually patience, discipline, and risk management, waiting for some kind of pullback to really see how the market behaves. That would be ideal. We have the previous all-time highs. We have now the blue dot line that is last week high. And we have this area of interest in which I will be buying for sure. We have 18,900, we have 8086, we have the golden pocket. I mean, there's a lot of opportunities in this market to really buy a pullback into continuation through all-time highs. Don't buy, just blindly buy all-time highs today, because basically that's where you enter a bit of a trouble. Because into the open, we got this consolidation, we push lower, and we already established this as high of day. And there's no opportunity today to really see out of this channel. But this is normal. Look at the 1 hour. We are just up here. After this big move to the upside, we are still up here. So don't be impatient and just wait for your opportunity, wait for your setup, chart your levels as I've been doing every single day, and you will be successful. And that's the most important thing. Meanwhile, in the meantime, we can watch other markets. For example, like the dollar. The dollar, remember that we established the bear capitulation to the downside. It's not super clear due to the volatility. We can remove that. And we already have some kind of bear bias. We have this inverse. So there's certainly weakness in the dollar. And this is good for the equities. As long as we are establishing, let me just clean up a little bit this. As long as we establish this bear trend into the downside, we might see some opportunities in equities. But yields are deep in the red also. Not today, it was throughout all these series of 1, 2, 3, 4, 5, 6 sessions. And as you can see, we are already on a technical level breaking down. 2-year breaking down on the 10-year, and treasuries are breaking out. So this is basically a recap of yesterday's. Today didn't have too much of continuation. We still have the same setup, the same bias, the same kind of market structure. And as long as we keep this, I will be remaining bullish. Small caps are suffering. Remember that yesterday I told you that IWM, the Russell 2000, is not clearly continuing as the same way S&P and the Nasdaq are doing. If we check the equal weighted ETF, the RSP market, you can see that we came down on momentum. we came down on the 50, and we came down on the 200. So these three, this is the percentage of stocks above the 20 moving average. It's at 40%. So we are not seeing this push higher through all-time highs in the equal weighted ETF. This is the only concerning part of the yesterday's push, and banks are mixed, and we are going to see more and more weakness on. I'm expecting weakness at some point. Look for this on the XLF, because lower interest rates means lower income for banks. The financial system is going to struggle as we return back to regular interest rates. So just be patient. All-time highs and a period, the path of interest rate cuts, it's tricky to trade. But look at what happened with Nvidia. I mean, everyone was watching this for continuation, and we just tanked minus 2.40%. Because tomorrow, Friday, is the reverse split, the 10 to 1, the 1 to 10. One share will be converted to 10 shares into lower price. So Nvidia is going to be tricky to see continuation tomorrow, and we are seeing some changes. I mean, be really careful, because all-time highs, Fridays, on-farm payrolls, I mean, a lot of things are going to happen in 24 hours. So this is my setup. I would be watching this kind of thing that I think it would be my best setup. The inverse head on shoulders, trying to find some entries into technical levels. That's the setup that I like. And it's the best risk-reward ratio to protect yourself of this market. You have to manage your risk, and you have to find good opportunities based on risk versus reward. If not, you will be crashed, and you will be liquidity for the other traders that usually apply this kind of process. So it's your call. And that's all from my side. Be patient, be disciplined, manage your risk, wait for tomorrow, be careful. Friday, non-farm payrolls, all-time highs. A pretty difficult combination, but if you found this video useful, please give it a like, support the channel by subscribing, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that this day is just a consolidation day. I'm still having my bias, and we will be being patient tomorrow into the overnight, watching some kind of pullbacks. Let's see what the market's prepared for us. But the most important thing is patience, discipline, and risk management. Those are key for your success. Stay safe, everyone, and see you tomorrow.